if I'm investing in stocks, how long do I actually have to hold them for before I can sell them? This is a question I get a lot. So I've gone forth, I've invested in equities, I've bought some stocks. Now what? How long do I have to hold these things for before I make money? So let's break it down. First things first, investing over the long run is always a better strategy. Now, can you make money in the short run? Of course you can, and people do, but I would say it's with less guarantee, it's a lot harder, and it's something that I don't advise for people who are just starting to invest, just starting to dabble in buying stocks, and it's not really the mindset we want to have when we come into investing. So what's a better alternative then? What's a better option, and when can I in fact sell my stocks? So the thing to remember is if you're investing, you're doing it for a reason. There's likely a goal. Yes, you want to make money. Of course, that's part of it. But generally, there's something that you're working towards. So if you needed the money for your goal, that would 100% be the time when you would sell your stocks. But could you do that in a month? Could you be investing in stocks for something you want to do a year from now? This is where it gets a little fuzzy. And you're going to hear different things, but I've been investing for a very long time, so I'm going to tell you what my view is and what I think people should be doing when it comes to investing. So we would not be putting money into stocks if we needed the money in a year. We wouldn't be investing in stocks if we needed the money in 2 years. And we seriously probably wouldn't even be investing in stocks if we needed the money in 3 years. So I know that's a little like, wah, wah. And the truth is you could invest and have made money in a year. So you'd be fine to take it out if you wanted to. But the problem is the stock market's pretty volatile, and when it's working best for us in terms of turning income into wealth is when we let it do its thing over time, over a longer time horizon. So the rule I like to think is if you need the money within 3 years, you probably shouldn't be investing it. You probably just want to put it into a high interest savings account or a CD. If you've got longer than 3 years, you feel comfortable about putting that money into the stock market and then taking it out, let's say in 3 to 5 years. 5 years seems to be the magic number, but it's a little bit long in my mind, and I do think that if you wanted to invest for a down payment on a house, if you wanted to invest maybe for a vacation or for something big, a big purchase, you could feel comfortable knowing that in, 3 to 4 years, your money will likely have grown and you can feel good taking it out. Last point here, taxes. So everything gets taxed, obviously, but I find that sometimes beginner investors don't take that into account. So there's actually a reason why you wouldn't want to take your money out of the stock market if it had been in the market for less than a year, and that has to do with taxes. So taxes on stock market gains, right, stock market winnings, that's called capital gains tax. And basically there's two types. There's short-term capital gains tax, which is for winnings less than a year, tends to be very, very high. They tax those profits at a much higher rate. Whereas if you're 1 year and beyond, that tax rate on those gains tends to be a lot lower. So there is a tax implication that we probably want to keep our money in at least a year. And then I would say from a market volatility perspective and just letting the market do its thing for you, going beyond a year probably makes a lot of sense. And then frankly, 3 to 5 years is that sweet spot.